The DBO is very gray on how they govern loan sales to third parties after closing. And so as it stands right now, the regulations read that you can sell to an institutional investor, which is a very narrow definition. Most buyers out there do not qualify. Or the buyer has to be a CFL licensee. And so in most scenarios, we'll see the buyers out there have their CFL license because it makes life easier to transact that way. And this gray area is seen not only in the regulations, but also seen in the reporting. So part of the discussion we had here at CMA in San Francisco at the Pool Managers Forum was a discussion on proposing legislative language to amend the definition of institutional investor to make it more permissible and more straightforward for CFL licensees to sell to these secondary market buyers, because as it stands right now, a lot of those buyers, not all of them, a lot of those buyers who are not CFL licensed don't fit in that definition. And unfortunately, in the state of California, on the other side of the coin, in the world of the DRE, right? The DRE states that you don't actually need a license to buy loans, provided that you are not holding them for resale. So if I'm out there buying paper for my own portfolio, technically speaking, under the DRE rules, I don't need a license because I'm not going to resell them. And so you have an imbalance between the DRE's regulations and the DBO's regulations, and that's why we want to propose some legislation to make it easier, make it clearer, right? And in a state that's so regulatorily heavy, and for a lot of our clients that have both licenses, we just want to have supreme clarity to allow them to sell freely.
So for now, any mortgage fund that wants to sell a loan, they have to go to some bigger firm that may be considered institutional.
For now,
and they can't just sell to a mom and pop.
If the mortgage fund is just a CFL licensee and they do not have a DRE license affiliated with their fund, then they're going to be restricted. All right, they can sell to another CFL licensee, or they can sell to an institutional investor. We can go over that real quick. Institutional investor is defined as a bank, savings and loan association, credit union, trust company, trustee of a pension plan or wealth plan, over $50 million in assets, a publicly registered company, or a subsidiary thereof. And so there are some buyers out there that are subsidiaries of a publicly traded company. Those guys, no license necessary, we're fine. But the vast majority are backed by these institutions, backed by these publicly traded companies, but they're not direct subsidiaries. And so we run into a challenge there because technically speaking, they're not institutional investors. And so it becomes a little bit of a gray area whether they can transact or not that way. So.